and also get some of the stock calls from our experts. And with this, let me welcome Nooresh Mirani as well as Kunal Bothra on the show. Hi Nooresh, good morning. First up, help us with your view on the index level, because the good part is that at least for now, GIFT Nifty is not implying a good gap down start. It's just 20 points cut. What's your reading for the markets? Because definitely the last week wasn't that great.
So if we look at our markets, the Nifty may have not broken 22,800, but the mid cap indices, the small cap indices, a lot of other indices have already broken a similar level and made a new low. At the same time, you have banks which are a little higher than the 22,800 mark. They did not make a new low or even test the recent lows. So we are in this divergent period wherein the drift continues. This could reverse once we start seeing some price action, which is beyond. Overall, say going back a little more, 22,500 to 22,700 is where the indices were pre-elections. And on the election day, it was 21,300 to 21,800. So there are a cluster of supports around this area. But we are in a drift as of now. We wait for price action to change to reverse the view. For now, the drift is lower.
Right. Good morning, Nooresh. Good morning to you as well, Kunal. And Kunal, if you look at the way how the screen is looking at this point in time, is blinking deep red when you talk about the broader markets, given the fact that you already have now the small cap index in the bear territory. How much more pain is left in that particular space?
Well, yeah, I think very difficult to say how much more pain is left. But yeah, I think the first phase of the correction for the markets has been more towards mid caps and small caps. What we've also seen historically is that on an average, when there's been a corrective phase for mid caps and small caps, the drop is closer to 20 to 23% broadly for the mid caps and small caps on corrective phases for the market. So I think we could probably be at a point where over the next few days or weeks, maybe another 2 or 3 percentage points broadly for the mid caps and small caps, and you might probably hit some sort of an average in terms of the previous trends for the indices. The good part about the market so far is that 22,800 is the level which we've tested thrice in the last 1 month, and we managed to bounce back for the index on those levels. So maybe that could probably be a point where the markets are expecting that this could be a demand zone for the markets, and that's where the near-term supports could lie.
Kunal, is the proof in the China outperformance, you think? And, we were just speaking with an expert and he was talking about as to how, China is where a lot of these tactical flows are moving. You track those charts very, very closely. What is it indicating? Because I think on over a 1 month basis, you're already up 25% on Shanghai, right?
Yeah. And that's absolutely certain, because when you look at the charts, Hong Kong and China, these are the only two indices where the money has been flowing into. These indices have classically gone into a strong outperformance zone. So I remember, I think there was this phase in September when these indices moved up by 20-30% in a matter of, I think, 4-5 trading sessions. Post that, these indices went back into a mild corrective phase. But then now these indices are coming back into a breakout mode. That generally happens when you see an initial flurry led by events stimulus, which was there for China mid of 2024. And from there started a phase of accumulation. What we are seeing right now in terms of the setup on the global charts is that most of the indices, whether it's European, US, etc., these indices are at new highs. Chinese indices, which were into a bear territory for the last 10, 12 years or so, these indices are making a comeback, and I think that's where the money is getting balanced into. So the money is moving out of India as such, more of profit booking, which is happening in the mid caps and small caps, and that money is definitely moving to China and Hong Kong markets.
Yeah, and I think that proof is in the data that we're flashing on your screens right now. In fact, not just year to date, but more imperative would be the last 1 month data, because that's where you will see that extreme outperformance from Shanghai, which is, I think, climbed up about 25% alone. Hong Kong in just last week alone has seen a 7% surge, and that's been the performance of other markets as well. The Dow, Shanghai holding up about 1.5%, and European markets as well have been doing very well, and stark underperformance from India, about a 2.6% fall in just the last week at an index level alone. But